Looking for Invesco funds that can stand the test of time? Want investments you can set and forget for decades to come? Then these 6 Invesco gems are worthy of a permanent place in your portfolio. With a wide array of market conditions on the horizon, you need rock-solid fund managers and strategies that will weather any storm. We've combed through Invesco's extensive lineup to uncover the select few that blend stability, growth potential, and time-tested approaches. Number 1 on the list is Invesco S&P 500 Equal Weight ETF, RSP. This ETF has demonstrated strong long-term performance since its inception in 2003. By equally weighting its holdings rather than market cap weighting, RSP provides investors greater exposure to mid and small cap stocks relative to the traditional S&P 500 index. This alternate weighting methodology has given RSP an advantage historically. Over the past 10 years, RSP has generated an average annual return of 13.42%. To put this performance in context, the standard S&P 500 index has returned roughly 12% annually over the same period. While a 1.42% difference may seem small, it can make a major impact over decades through the effects of compounding. Drilling down further, performance data from the past 5 and 15 years also indicates RSP's equal weighting approach has provided higher returns than the market cap weighted S&P 500. This is evidenced in the fund's ability to outpace the index during both periods of strong market growth as well as periods of volatility. RSP's lower volatility relative to cap-weighted benchmarks is also an attractive attribute, especially for risk-averse investors with long time horizons. Although past performance cannot guarantee future results, RSP's consistent outperformance of the S&P 500 since 2003 suggests its index methodology has created great value for investors. Number 2 on our list is Invesco QQQ Trust, QQQ. The Invesco QQQ ETF has established an impressive long-term track record since its inception in 1999. As the cited sources show, the fund has generated average annual returns of 10.88% over the past 23-plus years. Its returns have exceeded 17% annually over the past decade as well. By tracking the NASDAQ 100 index, QQQ provides exposure to the largest non-financial technology and consumer companies listed on the NASDAQ exchange. Many of these firms have dominated their industries and seen tremendous growth, driving strong returns for the ETF. In the past 5 years alone, QQQ has delivered annualized gains of 22.41%. This period captured the massive rise of mega-cap tech stocks as the industry has become increasingly important. Names like Apple, Microsoft, Amazon, Google, and Facebook have led the way, more than tripling in value over the last half-decade. QQQ's narrow focus on these types of innovative, growth-oriented businesses has served it very well as tech has outperformed most other sectors. While past performance cannot predict future results, the long-term trends favoring technology are likely to continue. Digital transformation remains in the early stages across many industries and developing countries. This should create ongoing opportunities for the companies in QQQ's portfolio to grow their businesses. The Invesco QQQ ETF has proven itself as an excellent vehicle for participating in the tremendous growth of the tech sector for over 2 decades. Its focus on tomorrow's largest innovators is likely to continue generating strong returns, albeit with periods of volatility. For long-term investors with a high risk tolerance, QQQ deserves a serious place in a diversified portfolio. Number 3 on the list is Invesco Developing Markets Fund, GDFMX. The Invesco Developing Markets Fund, GDFMX, has been investing in emerging market equities since its inception in 1993. Over its nearly 30-year history, the fund has navigated numerous global economic and market cycles to generate attractive long-term returns for investors. According to the prospectus, the fund seeks capital appreciation by primarily investing in stocks of companies located or operating in developing or emerging market countries. The fund's 10-year average annual return of 4.85% demonstrates its ability to produce gains, albeit with higher volatility than domestic stock funds over that time period, as emerging markets tend to fluctuate more than developed markets. However, its performance is impressive when considering the full span of the fund's existence. Since 1993, GDFMX has delivered an average annual return of 10.71%, equating to strong, risk-adjusted returns for investors who have held it for 10-plus years. A closer look at the fund's holdings provides insight into how it has achieved this long-term outperformance. GDFMX takes a diversified approach, investing across both geographic regions and economic sectors within emerging markets. Top country allocations currently include China, India, Taiwan, and South Korea, large, rapidly growing economies that have helped drive returns. Sector-wise, the fund is invested in information technology, financials, consumer discretionary, and materials companies poised to benefit from secular emerging market trends. While short-term volatility is inevitable given political and economic instability in some emerging nations, the fund's diversified, research-driven strategy has successfully navigated these risks to reward long-term investors. With emerging markets projected to see significantly higher GDP growth than developed nations in coming decades, GDFMX continues to offer exposure to their expanding economies and industries of the future. Number 4 on the list is Invesco Oppenheimer Developing Markets Fund, ODMAX. This fund has achieved strong long-term returns since its inception in 1991. The fund has posted an average annual return of 10.47% over this extended time period, demonstrating an ability to deliver attractive growth for investors through different market cycles. While the returns of 4.11% annually for just the past decade may seem more modest, it is important to consider performance in the context of increased volatility that emerging markets have experienced in recent years. The flexible portfolio approach taken by Oppenheimer fund managers allows them to navigate changing conditions in developing economies. By focusing on larger companies, ODMAX provides exposure to more established businesses leading growth across diverse regions like Asia, Latin America, and others. This level of geographic diversification helps reduce country-specific risks for investors. Overall, the historical track record indicates ODMAX has rewarded long-term investors well for taking on emerging markets risk. Its portfolio strategy remains well-positioned to continue capturing upside from developing nations for the next decade and beyond. Number 5 on the list is Invesco Equity and Income Fund, ACEIX. The Equity and Income Fund seeks current income and long-term capital appreciation by investing primarily in income-producing equity securities and higher-yielding fixed-income investments. Over the past 10 years, the fund has generated average annual returns of 8.72%. Since its inception in 1984, ACEIX has achieved an average annualized return of 9.42%. The balanced approach helps reduce volatility while still providing growth potential. It's an excellent choice for conservative investors seeking both income and capital appreciation. Let's move on to the final ETF in the list, Invesco S&P 500 Low Volatility ETF, SPLV. The S&P 500 Low Volatility ETF seeks to track an index composed of the 100 least volatile stocks in the S&P 500. Over the past 10 years, SPLV has generated average annual returns of 10.11% with lower risk than the overall market. Since its inception in 2011, the fund has returned 7.33% on average annually. SPLV can help dampen portfolio risk while still providing exposure to large, stable companies. It's a solid core holding for risk-averse investors focused on capital preservation. While past performance is not indicative of future returns, these 6 Invesco funds have consistently demonstrated their ability to deliver long-term growth through changing market conditions. Their experienced portfolio managers have proven track records of selecting high-quality companies and maintaining a disciplined investment approach. If you want funds you can trust over the long run, managed by investors who share your buy-and-hold philosophy, it's time to take action. Do your own research on these 6 Invesco picks to see which are the best fit for your goals and risk tolerance. Then consider opening an account and making your first investment today. Seize the opportunity to let these proven performers work toward growing your nest egg for years to come. The time to start building your financial future is now. Don't wait any longer. Thanks for watching.